Hi there, I'm Patti Ogilvie, and I'm a senior enrollment counselor with the Student Loan Help Group.
And I'm Sam Pettingill. I'm also a senior enrollment counselor with the Student Loan Help Group.
So today we're going to talk about some financial tips for your student loans and learn how to prepare for your payments and review what's next for student loan borrowers. So Sam, let's start out by me asking you, why is it important to be knowledgeable about student loan forgiveness?
Well, that's a great question, Patty. I think, what it really comes down to is that when you know your options, you can save yourself money. We both know from having done this a long time and having experience with student loans that the servicers are usually the only place that you have to turn. And the servicer is not looking out for your best interest because they're making the interest on your loans. So, I mean, we just saw today where the Biden administration had announced that they're withholding $7 million from one of the servicers for not doing their job. So we know that no one's going to come out and tell you this information. You really do have to look it up for yourself and find it out for yourself. But it's so important because of how much money you can end up saving.
Mhm.
We've both seen it every day. Like borrowers can save tens and sometimes even hundreds of thousands of dollars relative to just making the standard payment and leaving things as they are.
Mhm.
If you're seeing like a $700 a month payment, wouldn't you rather be on a $200 a month payment and get the difference forgiven?
Right.
Um, you can end up making years or even decades of unnecessary payments if you don't know what your options are.
It's true.
And because student loans affect your credit score and your ability to borrow, like your ability to qualify for a mortgage, it's better to be done with them sooner than later. You don't want them holding you up for years and years if you don't have to.
Right.
So, I mean, in general, I mean, obviously every situation is a little bit different, but how long should borrowers make payments before they receive forgiveness?
So like you said, everyone's situation is different, and it really depends on obviously their situation that's going to dictate what programs that they qualify for. Some borrowers, such as teachers who qualify for teacher loan forgiveness, might only need 5 years before smaller balance is forgiven. And that's usually a better option for somebody who does have a lower balance, not somebody who has a larger balance. Public service employees, and that's any state, county, local, federal government employer or nonprofit, that's considered a public service employer. And it doesn't matter what your position is, it's all about the employer as long as you're working 30 hours a week. But if you can go towards public service loan forgiveness, generally that's 10 years of income driven payments. And then many borrowers who aren't in public service, they'll be on what's called income driven repayment forgiveness, also known as IDRF. And this requires either 240 months, which is 20 years, or 300 months, which is 25 years of qualifying payments. Now, however, this requirement may be changing for some borrowers with low balances next July. And we'll talk more about that at the time because it's not in place yet. So we always hate to mention anything that's not actually happened yet, just to be safe. And then even if someone hasn't been paying for these lengths of time already, they definitely want to get on track immediately, especially right now with the temporary programs like the one-time account adjustment that's going on through the end of the year, because they may be able to receive prior credit for time in repayment that was never counted, that won't count if they don't take advantage of that, and normally it wouldn't have counted. And these are including times in forbearance and possibly deferment as well. So definitely running out of time to take advantage of that, like closing in quick.
Yep. And
Um,
I've seen so many people that are like, I know I haven't been in my position 10 years or I haven't paid for 10 years. Don't wait because you just don't know. Even though you didn't pay for 10 years, like that person that you mentioned earlier, you might have 7 or 8 years in forbearance and that may
Yep.
end up counting.
Yep, and it's gonna count if she was employed, and she was. So same with, anybody out there, if you're employed in public service or even not, definitely you want to know your options for sure.
Yep.
And then what student loan forgiveness programs should borrowers focus on, this time of year?
Well, I think the most important thing for borrowers to focus on right now are public service loan forgiveness and income driven repayment forgiveness. Not only are those the two programs that tend to help the most borrowers, like just numbers wise, they're the programs most borrowers benefit from. They're also going to benefit from the one time adjustment program, which is expiring at the end of this year. So, like, that is the deadline that is the most urgent. The end of the year, we take that to mean December 31st. That's just 2 months away. So, just to answer what is the one-time adjustment, why is it so important? Why would we not want to miss it? It's a temporary modification to the way that qualifying payments get counted for both PSLF, so public service loan forgiveness, and IDRF, income driven repayment forgiveness. With either of those programs, if borrowers are set up correctly by the deadline at the end of this year, they'll receive additional credit toward those programs that normally would not qualify. That includes any months in a repayment status, regardless of the payments made or whether the payments were made at all, regardless of the loan type or the repayment plan that you were on. So even if you've never been on an income-driven plan before, you can still benefit. Any month in which the loans were in an eligible repayment, deferment, or forbearance status prior to a consolidation. So normally, if you consolidate your loans, that's resetting your progress completely. You have to start over with making your 20 or 25 years of payments, for example. With this one-time adjustment, no matter how many consolidations you've had, they're going to be able to go back and give you credit until the program started that you're applying to. So 1994 for IDRF or 2007 for PSLF. They're also going to give you credit for any months that you spent at least 12 months in consecutive forbearance, so one stretch of forbearance at a time, or any time that you were 36 or more months in a cumulative forbearance. So if you had loans for the last 15 years and in total you have at least 3 years or more in forbearance, all the forbearance time will count no matter how long or short each forbearance was. You're also going to be able to count any month in deferment prior to 2013, with the exception of in-school deferment. So that also can be huge. If you've had economic hardship or military deferments, those are going to be qualifying too. And this has already started. And it's not something that necessarily is like off in the future that may or may not happen. This is a program that's going on right now. People are already seeing the benefit from. The first batch of PSLF forgiveness from the one-time adjustment happened this January. And the first batch from income-driven repayment forgiveness happened this July and August. So people are already seeing this benefit. In fact, 800,000 people received notice in July that they were eligible. So like literally millions of people at this point have received that benefit this year. So borrowers that are eligible now, like say this change makes you eligible because you're set up correctly, it would now put you over 120 payments for PSLF. You'll be able to see that discharge during 2023. Of course, there's obviously delays in processing with the Department of Education, but assuming everything is ready, they're not going to wait till 2024. They're processing discharges every 2 months until 2024. And then everyone who has not been adjusted yet will see the adjustment in early 2024. So like if you're not quite to your number of payments yet, it'll happen early next year.
Right. And Sam, I don't know if you looked yet today, but we're almost at $193 million in forgiveness for the people that we've helped so far. And
wow,
a lot of those are from that one-time account adjustment. So it's really happening, people.
Yeah, it really is. And it's amazing when you see, someone get added to that spreadsheet that it's like, oh, this amount got forgiven. That's decades probably of stress for that person that's gone now. So that's so amazing when you think about it.
For sure.
So Patti, I mean, we're talking about all this exciting good news. Like how can borrowers qualify for loan forgiveness or cancellation or discharge?
So there are many ways depending on, again, I know we've said it already, but everybody's situation is different. So besides the public service loan forgiveness and the income-driven repayment forgiveness and teacher loan forgiveness that we mentioned, there are other programs for, again, special situations. There's TPD, which stands for total and permanent disability. There's borrower's defense for borrowers who were defrauded by their institutions. It's important to use the right tool for your situation. You may be eligible for multiple programs, but you can't always use them together. So for example, teacher loan forgiveness and public service loan forgiveness, you can't do those at the same time. So you need to definitely use the most beneficial program. Something else that a lot of people aren't aware of, I know a lot of people have filled out that borrower's defense application and they're thinking, oh, great, while all this is happening, I don't have to make payments, but it's going to be going on for years. And that still may not be your best option, because if you're in forbearance, I looked at somebody the other day who filled out a form and they put the borrower into general forbearance until 2040. Like I've spoken to people in our company who are working on some of these programs for people for the borrower's defense. And, it's 6-7 years and these people still don't have their money. So just because you're eligible possibly to get some money from that defense fund, doesn't mean that that's going to still be your best option. I would still weigh the pros and cons, because you could be waiting for years, wasting time that you could be accumulating qualifying payments, for example, towards public service loan forgiveness. You may only need a $0 a month payment, and you're wasting all this time. So definitely important, even if any of those, meet somebody's eligibility requirements for their situation, still get it looked at, because it doesn't mean it's your best option. For
That's
sure.
so true. Yep. I talked to somebody like that in a similar situation a couple of weeks ago, and she had applied for borrower defense last year, didn't realize it was putting her into that forbearance. And, she could have qualified for public service loan forgiveness within a year, but if she'd stayed in that borrower forbearance, she would not have even known that, she was missing out, and would have been able to qualify.
Exactly. Because the person I mentioned, I go, why are you in forbearance until 2040? I couldn't figure it out. And then it clicked. I'm like, oh my gosh. And she goes, I didn't even know. She had no clue that
Yep. Same with the person I talked to. She's like, I didn't realize it put me into forbearance. That's not what I want. So.
Right. Exactly. So Sam, talking about all this payments and so forth, what are the key financial tips that people should use when budgeting for their student loan program?
Well, unfortunately, the Department of Education doesn't have a ton of flexibility, as we've all seen. Like, obviously, you have your standard payment versus your graduated and extended payments. You have income-driven payments, but they're not really in touch with reality sometimes when you see the amount of your student loan payment. I mean, we know we have people saying, oh, I have a $7,000 standard payment a month. It's not going to be doable.
Right.
So really, the most important thing you can do is get on to the best income-driven payment plan for your situation. That's usually going to be the lowest available payment, but there are some special considerations for certain programs where it's helpful to have an expert look at it. Like, for example, income-driven repayment forgiveness, whether you're making 20 or 25 years of payments, in part depends on which payment plan you're on. So you
Right.
actually do have the ability to make 5 fewer years of payments if you use the correct payment plan. That's the kind of thing that a lot of borrowers don't know, and they're making unnecessary payments. But definitely a lower income-driven payment plan is definitely going to be better in terms of if you're just trying to stop the bleeding right now, you don't want to make a huge monthly payment. Income-driven payments would be the first place to start.
Right.
The other thing, of course, would be getting on track for forgiveness, because even if you're saving a little bit of money in the short term, if you're not saving by getting the loans forgiven in the long term, I mean, you and I see that every day. People who have, a $50,000 or $100,000 balance, you start to get to the point where the interest is constantly building up against you daily. And even though you're making your monthly payments, you're barely seeing the balance go down, or sometimes actually seeing it go up, even though you're making your payments. So, like, it's good to get to a point where it's a comfortable monthly amount. But if your payment is $50 a month and you have a $100,000 balance, forgiveness is the way you're going to get rid of that. Like, if you're just chipping away at it $50 a month, you're never going to overcome your interest.
Right.
So definitely getting a consultation, like talking about what forgiveness options you have, I would say is probably the most important thing you can do in helping make sure that this is going to be comfortable in your budget, not just now, but in years going forward too.
Right.
So, I mean, now that we're talking about income-driven payments, how will the account adjustment affect people if they haven't applied before, if they've been on like extended graduated or something for the last 10 years? How will it work for them?
So per the Department of Education, even if you've never applied for an income-driven payment before, you're still going to receive the benefits of that one-time account adjustment as long as you're set up correctly by the end of the year, which means that all prior months in repayment are still going to count as if you were on an income-driven repayment, going back to 1994 for IDRF and October 1st, 2007 until present. So normally none of those payments would count, but once set up correctly before this one-time account adjustment, I keep calling it a one-time account adjustment waiver until that ends at the end of the year. Otherwise, come January, everything goes back the way it was. You have to be set up correctly moving forward. Otherwise, none of your payments are going to count. So it's really important that you take advantage if you can claim any of those past payments before, we see that, end date in December.
Yep.
And then Sam, what are some of the dates that people should have on their calendars for the remainder of this year? I know the year is running out, but we got a couple months left.
Yep. Well, I would say there is definitely that one big date we've been talking about. That's December 31st. The Department of Education has not given a specific date, but they've said the end of 2023. We would take that to mean December 31st. It's the last day of the year. So, you do need to get on track for the one-time adjustment before then. If you have loans taken out at multiple different times, or you have loans that aren't direct, this is your last chance to fix that situation. Otherwise, like Patti mentioned, you're kind of starting over at square one. I mean, the lady that I just spoke with earlier this morning had gone to graduate school in 2015 and had loans from 2005. It was going to be a huge benefit for her to take advantage of the one-time adjustment because the loans from 2015 were going to be treated like they existed in 2005. All of her loans would get forgiven now, as opposed to having, you know, probably about 4 more years of payments otherwise. So like, that's the kind of thing you really don't want to miss.
Right.
As far as next year, we also have a couple of important dates next year that are worth mentioning. So July 1st of 2024, there's additional improvements to the SAVE income-driven payment plan going into effect. And that includes a lower payment for people with undergraduate loans. I've been informally calling it the undergraduate discount. Basically, it's if you're right now, they're giving you a certain number. Let's say it's $100 a month. Next year, if you had 100% graduate loans, or sorry, 100% undergraduate loans, if all of your loans were from undergraduate 4-year education, then you will end up seeing, in effect, a 50% discount on that $100 payment. It would go down to $50. If you have a mix of both, it's going to be a percentage based on what percentage of graduate loans you have. So if it was half and half, now your payment would be $75 and so on.
Right.
It's going to be a big deal, especially for some people. I had somebody yesterday that had a $2,000 monthly payment. It goes down to $1,000 a month when that discount takes effect because they were all undergraduate loans.
Oh, wow.
So it can make a pretty big difference if you know, are mostly undergraduate. The other one that I think is worth mentioning is the Department of Education just clarified last week that August 28th of 2024 is the last date to get into the Fresh Start program. If your loans happen to be defaulted, that is for almost everyone the best option you have to get out of default. So there's only, you know, about 10 months or so of that left to go. You definitely don't want to miss that program because it has some pretty unique benefits for defaulted loans.
For sure. For sure. Well, great. So really the best thing for somebody to do is set up their phone consultation with us. Let us review everything before they start taking steps that they can't undo, because that does happen a lot. People don't think they know what they're doing, but they don't, unfortunately, because the DOE doesn't make anything easy. So definitely that would be what I would recommend. How about you, Sam?
Yeah, no, I agree. I mean, you could make a mistake, like say consolidating Parent Plus loans with your existing loans, and all of a sudden your payment quadruples. Things like that you can't get back out of. So
exactly.
Yeah, I would agree. Before you make any steps that you can't change, you know, make a call to us and get on the right track. At least know what your options are. And then, you know, going forward, you'll have the confidence of saying, I know I'm doing the right thing. I think I have had so many people tell me, like, this is the most beneficial phone call I've ever had about my student loans. Like, you're spending 45 minutes with us, but at the end of it, you're understanding what's actually going on and what you can do, as opposed to just kind of stumbling around wondering if you're doing the right thing.
Exactly. Well, great. So I think we covered a lot of info today, so everyone can keep an eye out for, you know, next month, and we'll give you some more great information. So thanks, and I hope you all have a great day.
Hope you have a great day as well.
Bye, y'all.